Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about LINGBAO Gold Group Company Limited annual report. LINGBAO Gold Group Company Limited offers a diverse range of businesses and services. At the core of its operations are gold mining and processing activities, which involve extracting and refining gold products such as bullion and concentrates. The company also engages in smelting and sale of gold products, both domestically and internationally through imports and exports. In addition to gold-related services, LINGBAO Gold Group Company Limited provides a variety of other businesses and services. These include the sale of mineral products, jewelry, machinery, equipment, and components for gold processing. The company is also involved in mine engineering construction, development of mining and exploration technology, design of mineral engineering, and recycling and disposal of waste from mining and smelting activities. Furthermore, LINGBAO Gold Group Company Limited holds significant mining and exploration rights with 35 licenses covering an area of 216.04 square kilometers. This extensive portfolio enables the company to explore and extract various minerals, including silver and copper products, as well as sulfuric acid. The company's comprehensive range of services and products positions it as a leading player in China's gold industry. LINGBAO Gold Group Company Limited market capitalization of 34 billion is significantly larger than the average industry peer of roughly 3 billion. This shows that LINGBAO Gold Group Company Limited holds a significant advantage in their industry. LINGBAO Gold Group Company Limited trades at a higher price-to-earnings ratio of 23 times and a higher price-to-book ratio of 6.92 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The leverage on the balance sheet appears elevated, with liabilities of 56% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth and decline are multifaceted and influenced by various factors. On the growth side, sales of gold have been a significant contributor, increasing by 11.4% in 2025 compared to the previous year. The Shanghai Gold Exchange has also seen a substantial increase in sales of gold bullion, exceeding 10% of total revenue and growing by 9.1%. Government grants and sundry income have also shown notable increases, with government grants rising by 21.7% and sundry income increasing by 194.3%. In addition to these factors, the company has implemented various initiatives to optimize resource allocation and procurement efforts, leading to improved operational efficiency. The smelting segment has seen significant improvements in production capacity utilization, while the mining segment has experienced sustained year-on-year growth in gold production. Furthermore, the company has continued to optimize its production organization and enhance production scheduling, resulting in stable production pace across mining companies in the PRC. On the other hand, revenue decline is primarily driven by a decrease in scrap sales revenue, which fell by 17.6% in 2025 compared to the previous year. Interest income on financial assets measured at amortized cost has also decreased, dropping by 38.5%. These factors have contributed to the overall decline in revenue, highlighting the need for the company to focus on growth drivers and mitigate potential risks. The net income of the company has experienced a significant increase in recent years. Specifically, it rose by 92.96% from RM billion 461,919,000 to RM 820,920,000 982,000. This growth is even more pronounced when compared to the previous year, with an impressive increase of plus 121.3%. The improvement in net income can be attributed to various factors, including optimized production organization, technological innovation, and cost reduction measures. The profit margins of the company have also likely improved due to these efforts. While no specific percentage change is mentioned for the gross profit margin of products from own mines, it is clear that the company's focus on efficiency and innovation has had a positive impact on its bottom line. Overall, the combination of increased net income and improved profit margins suggests a strong financial performance by the company in recent years. The company's financial performance indicates a significant milestone. According to the provided information, the company has successfully achieved a positive operating cash flow. This means that the company's earnings before interest and taxes, EBIT, are sufficient to cover its operational expenses, resulting in a net inflow of cash from its core business activities. This achievement is a testament to the company's efficient management and effective operations. A positive operating cash flow is essential for any business, as it enables the company to invest in growth initiatives, pay off debts, and maintain financial stability. The company's ability to generate positive operating cash flow suggests that it has a solid foundation for long-term success. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, there has been a notable increase from RMB 12,644,510 in 2024 to RMB 3,216,333 in 2025, representing a 22% rise. This growth can be attributed to the issuance of convertible bonds, which added $166 million to the company's debt level. The total debt level has also increased by $166 million. The interest expenses have also seen a substantial change, with RMB 99.67 in 2025 compared to RMB 0 in 2024. This indicates that the company is now bearing interest expenses on its convertible bonds, which were previously non-interest bearing. The effective interest rate on initial recognition stands at 9.72% per annum. Overall, these changes suggest a significant shift in the company's financial landscape, with increased debt levels and corresponding interest expenses. Management is optimistic about the company's outlook, citing significant breakthroughs in strategic investments and acquisitions. The acquisition of a gold mine in Papua New Guinea is expected to increase the company's gold resource base, expand its production scale, and enhance its overseas presence. This move is also anticipated to provide stable recurring income for 10 years through the Simberi project. In addition to these developments, management is focused on optimizing talent pipeline construction and enhancing lean management levels. This includes attracting professionals in key areas to improve the company's institutional system and risk prevention capabilities. While there are no plans for any material investments beyond the current projects, management appears confident in the company's ability to drive growth and stability through its existing initiatives. The company's financial activities have been documented in various sections of the report. One notable aspect is its dividend payment history. According to the report, the company has indeed paid dividends on multiple occasions, as mentioned in pages 11, 12, 27, and 45. This suggests a consistent commitment to returning value to shareholders through this means. However, there is no information provided regarding share buybacks. Despite the detailed documentation of other financial activities, this specific aspect remains unaddressed. That concludes the financial summary for LINGBAO Gold Group Company Limited. Feel free to comment below, and I will be happy to answer them when possible.